All right, welcome everybody. I actually recorded most of this and realized my mic was off, so I'm re-recording this right now, and we're going to go through why I can have a 70% win rate on my strategy, or on my account in general, because we'll see that I don't always use my strategy, but actually have a negative return, almost $2,000 in negative return, and we'll take a look at my biggest losses, and my average losses, and my average wins, and my biggest wins. Let's get into it. Okay, so the strategy that I'm using is a SSL cross with the WAE and no Kaiju Sen. So what I'm doing is taking shorts, okay, when there's a cross down, and so it turns red, and these two indicators say, yep, it's a go by being above the dead zone. This little clear line is the dead zone, and this line right here is the dead zone that I use, the moving average that I use. There's a couple more rules into it. I won't get super in depth. Basically, I can't take a short after a higher high. I can take one after a lower high. That's really it. And the same thing for a long. I can't take one after a lower low. I can take one after a higher low. And those are the basic rules of it. And as you can see, 70% win rate. But my risk reward and my psychology behind the trades often lead to big losses and blowing up the count. So let's take a look into that. Okay, so this one is the epitome of a trade where I think it's going to go my way. I think that I'm looking at the chart. I'm saying, okay, I know that this can go my way. I know that I know the general direction of the trend. It's semi-tilted because at this point I was down $450 or something like that in the day, and I'm not using my indicator. Maybe I was. I'm not sure. But let's just say I wasn't, because there's a lot of times when I go in full tilt, like I'm in poker, and I'm just saying, you know what, take my full account. If I win, I win. If I lose, I lose. So here we have a new trend, a new green trend coming in, and I go long right here. I said I'm going to buy the next big red candle. As a general trend is up, right? It's not just up, it's up, okay, on the 5-minute chart. I said I'm going to set my stop loss below one of the last big green bars. So I'll stop it, like here-ish. Actually, I had it here, and I moved it down at like when it was like here. I was like, no, this is going to be great. This is just a pullback. And I don't know if it's me not trusting that it was just a pullback or me not caring, but I got stopped out right here. And obviously you can see what happens right after I got stopped out. Possibly my biggest winning trade of all time, had I stayed in it, and I didn't. And I don't deserve to stay in it because I wasn't trading based on my strategy, which I just showed you. I was trading based on price action and my gut feeling and rolling the dice and saying I didn't care and being on tilt, which is no way to trade. Now, there's something very interesting about this chart. Okay? Look at my losses. Negative 500, 400, 400, 300, 200, 200, and so forth. 200, 200, 200, 180, 150, 130. Now you're going to expect to see my wins right around that area too. Wrong. A bunch of 50s, 40s. We don't have a win above $112. What does that tell you about my risk reward ratio and my psychology? My psychology is telling me when it hits a certain mark, when it gets around $60, I'm like, oh my gosh, I better take profit, or this is going to reverse on me and I'm going to lose money. That might be the case, or my risk reward ratio is completely bonkers, or I don't even have one. So we're going to take a look at this, because that is backwards. Your biggest loss should never reach your biggest gain when you're day trading like this. It should be the complete opposite. You should have an average of, it looks like an average of $50 in wins. Well, my average losses should be like $25, $30, maybe $40, not $200, $300, $400, $500. So let's take a look at this win. So I believe, yep, I shorted right here, right above this massive candle. Okay. Now this is not following any strategy. There's no way the SSL crossed down on that candle. I was going against my strategy. I was playing the price action, and we're just gonna say I got lucky. So I shorted right here and I exited right here. Lucky. It was only for $112. If you're gonna go on tilt with stuff, you're gonna roll the dice and stuff. you should do it the same way that you do with your losses. You know, when you're down 400, you're like, I don't care, I'm bag holding, I don't care, I've got diamond hands, I don't care, I'm holding. We don't do that with our winners. With our winners, it's like, oh my gosh, I'm at 60, 80, 90 bucks, I'm getting out. That's horrible trade psychology. And you don't want to be trading with that, especially for real money, especially if you take it seriously and want to do it for the rest of your life. Now, we obviously have a lot of trades that we won. 70% I won. But it's these losses that I really want to look at. So let's take a look at these losses. Okay, here again we have one that was just not based on anything with my strategy. Actually, totally against my strategy. So I can almost guarantee you right here, the SSL crossed up. Instead, I shorted right here. So I went against my own strategy, against my own rules, against my own filters, and I got stopped out for a $450 loss, and I was going against the trend. I don't know if I was trying to catch a trend on the 1 minute chart or what, but I was going against the trend. So I was breaking every rule in the book, and I let it ride to $450 on the loss. I was getting in massively 50 contracts and doing all this stuff. When you start breaking your rules, you cannot succeed. You will not succeed. Let's take a look at another one. The $400 loss. I can guarantee it's going to be the same thing. This is another short position, okay? So, look at this one. This is just one contract that went bonkers, okay? This was a full tilt. Guarantee you the SSL crossed down here. I don't know why I shorted here, especially when if you look to the left, there's support right there. There's tons of support right there. This whole zone is support, and I ignored it. I ignored my own strategy. I said I can do this based on what I feel that the chart's going to do. I'm going with the trend, you know. Okay, so I had one thing right. Okay. Well, look what happened. Immediate cross up, immediate gain. 1, 2, 3, 4, 5, 6, 7 red bars. Not even coming close after I entered. Not even coming close, and I stop out here. So here's the big problem with this trade. Why is my stop loss up here? If I'm shorting here, the most reasonable stop loss is either the recent swing high, if I'm doing a large risk to reward ratio, or the high of the previous candle, which I would do like right here. So then my take profit would be somewhere down here. You know, maybe I was thinking, you know, it might touch the support again or something like that. Either way, horrible trade, horrible stop loss. Actually, I don't even know if I had a stop loss. I'm pretty sure my broker got me out of this trade. So no stop loss, ignoring my rules, not trading, over trading most likely. Because if you get down, if you get into that psychology of tilt, then you're going to start over trading. When we start over trading, oh my goodness, you can wave goodbye to your account. So let's take a look at some more. So right here, we have another short going against the trend. I can tell you right now by looking at the chart, there's no SSL cross down, not at all. And the volume's green, so there definitely would be an indicator of going short here. So I went against what I thought was going to happen. I was thinking maybe this is just a quick pull up, and we're going to get a drop down, kind of like down here. Oh yeah, I'm going to nail this perfectly. Instead, massive green bar. No stop loss above the recent swing high, which I should have done, so I would have got stopped out here for maybe a $75 loss. Maybe 100. No, probably about 50 actually, looking at the chart. Instead, I let it ride all the way up here and I get out. So I'm just ignoring rules, basic trading rules. I'm ignoring them, and I'm not creating stop losses. That makes sense. I'm not creating risk rewards. I'm not entering trades based on strategy. I'm entering based on feelings and emotion, gut, and being on tilt. It's backwards. It's backwards trading. Okay, guys, something else I want to look at. Along with the stop losses, I want to look at the hold times. So if you look at my biggest losses, I'm holding for 21 minutes, 28 minutes. That's almost a half hour. 22 minutes, 11 minutes, 19 minutes, 13 minutes, 17 minutes, 24 minutes, 25 seconds. That's a brutal 125 loss in 125 seconds. That's overtaking your contract size, obviously. 20 minutes. So I'm holding for a long time in these losses. Now let's check out the other side. 5 minutes. 14 minutes, okay. 2 minutes, 2 minutes, 5 minutes, 21 seconds, 8 minutes, 2 minutes, 4 minutes, 7 minutes, 14 seconds. I mean, nothing really above 20 minutes. Okay, we have one down here. That's it. one down here, all the way down here, for $48 win on the short. I mean, nothing above 20 minutes. There's nothing above 20 minutes. So this directly plays into the psychology of trading, is what I was telling you. So I'm not only not creating a stop loss, but I'm holding my losses longer than I'm holding my winning trades. That's backwards. You should be holding your winning trades far longer than your losing trades. You should be setting stop losses to coincide with how long you want to hold the trade. So if I'm holding a trade for 14 minutes and making $100, that's great. But on the flip side, if I'm losing $100, I should be out of that trade in 2 minutes. I shouldn't be holding for, what was it? 21 minutes, 28 minutes, 20 minutes, 22 minutes, 11 minutes, 13 minutes, 17 minutes. I mean, 2 or 3 times the length and 2 or 3 times the size of my winning trades. Okay, guys, well, that is the breakdown that I wanted to share with you guys. I wanted to give you guys a glimpse into what I've been looking and testing on futures. I think I love to trade futures. It's an amazing experience. Even though I'm down $2,000 in the past, year and a half or something like that, it's not a ton, but it's enough to make you think. Obviously, when you have a 70% win rate, you should be expecting a nice profit, but that's not the case. So what I'm going to do next is I'm going to be uploading my Fidelity, my Webull, and my other brokerages, my TradeZero. TradeZero is my actual day trade account that I went all in on, so that will be interesting to look at. So I'll be doing 2 or 3 other accounts and looking at those and seeing and dissecting the wins and the losses and the emotional trades, and we can try to pick apart some lessons and some things that we should do and some things that we shouldn't do. I hope this was helpful for you guys, so you guys get a glimpse into the strategy that I should be using. I love that I did show you the strategy and obviously showed you trades that I didn't use it in. Stop losses are important. Set up a stop loss, understand your risk reward, understand your account size, and trade reasonably and never trade emotionally. And if you get on tilt, shut off your computer, shut off your phone, do what you got to do, get out of your broker, and make sure you secure your winning trades.